So, hello, and a massive hello to everybody. How we all doing? Rocking and rolling in a free world. Here we go. No trade calls, recommendations. Everybody's sponsored for their own stuff. We're here for educational purpose only. So, let's do this, guys. 17th of March, 2819. No trade calls, no recommendations. So, interesting week shaping up here. Now, keep in mind that March tends to be a little bit heavier, right? We tend to sell off after the quad witching is done and over, after the OPEX. So you should look for, our expectation going into this week should be for the market to be a little bit heavier and to trade with a heavier tone in this back end of the month. Also, as we discussed in relation to, earnings and the possible blackout periods, etc. And the other thing to keep in mind is also that we do have a lot of stuff on deck. So we do have Brexit vote on Tuesday. We've got the FOMC on Wednesday. Thursday is a pretty packed day with Australian jobs. We've got BOE, right? We've got, there's the SMB. There's a lot of stuff going on. And then on Friday, we have all those PMIs out of the EU. So interesting week shaping up. Now, because of the fact that we have this FOMC, I also think it's going to be massively important for some of the swing ideas we've been having on the DXY, right? So we've been short the DXY through a number of different pairs. And what I will do here, again, for subscribers, just expect to see a second video right after this one with detailing some more specific trade updates and new trade ideas on the euro and on USD JPY, more specifically for this week. But I'm going to do that in a separate video also to keep these a bit tighter. And as we know, we like to have them shorter and also, more theme specific. So it's also easier for subs to go find them out. Now, so into this week, SPX, what's going on? Now, what you want to keep an eye out for is how we behave around this 78.6 level. As we said, we expected this to ramp up. Remember, we got long on Friday, right? And we're expecting the ramp. As we said, I actually tweeted this out on Twitter too. We expected the bulk of this quad witching ramp to be done by Wednesday, right? And essentially, this was the Monday. This was Friday, Monday, Tuesday, Wednesday, Thursday, and Friday, right? So far, so good. We read that quite nicely. So what we want to see is how do we behave early in the week and post FOMC? Because clearly, as long as we hold above the 78.6, the path of least resistance is for us to continue to grind higher. I think it looks like it's about 4%. We've got 4% or something, 4.3, 4.4 to take out new all-time highs. So that's clearly going to be on the bull's mind. Now, if we can't get any selling coming in or any dip back into the 78.6, but this is the squeeze, right? This is the path of least resistance. This is not something you want to fade, right? If you're looking to get short, this is the area where you're looking for shorts, you're looking for failure, you've got something to trade against. But if the squeeze is going, either you're playing a long, right? Especially in those rips in the morning post the 10, 11 a.m. turn. The only thing you can do is try and be tactical and play to the long side, or you have to wait for the failure. Nobody's ever become a hero or made a sustained long-term track record trying to fade melt-ups, right? You just let the weakness come in. There's just no edge, right? There's no edge. Wait for the setup. So clearly above that, this is the path of least resistance, and it could be an ugly squeeze like we've seen. But around here, this remains interesting, especially short-term for some failures, because we could see some nice shorting opportunities unless you're already short. And keep in mind, we've got all these gaps, opening gaps from the OPEX ramp week. Our base case is always that these are going to get filled, right? So we just need to find a nice asymmetric opportunity to try and take advantage of that. And that's fairly similar to what we've been discussing also in the weekly webinars this week. If you look at the NDX, right, we're still stuck around the 78.6. And any failure, any day close back below this gives us an opportunity, especially if you see some weight coming in back below this zone, right? Gives us an opportunity to trade with fairly defined risk to fill all these gaps. So that's clearly something we're going to be focused on. Now, our control chart remains the RTY. And as we said, this one also, broadly speaking, stayed exactly where we would expect it to stay. We expected this to be the weakest. It's still holding below the 1600. It's still holding below the 200 DMA, and it's still making a series of lower lows with these repeated failures on the daily, the Russell. So again, this is our control chart. So we're still holding shorts from these failures, and these are still in play. And our base case was that we would get this ramp in the OPEX week, but ultimately that we'd stay inside this chop zone. So here, for us to get uber bearish or uber bullish, we need to see either a daily close back above here or a daily close back below here. As far as we're trading, this is a chop zone in our trade. These shorts are in play for a little bit more weight. Now, conservative traders actually flanned up last Friday on this for the move higher. The more aggressive traders are still holding because the base case expectation is that remains for a retest of these lows. Now, if anybody's wants a more of an update on the trade, on the two scenarios, on the chop trade or on the swing, I'm still holding the swing. You want me to talk through my trade a little bit more, my position, how I'm managing that, just email in and I can do a video on that this week. I'd be more than happy to do that. Now, the other thing we have to keep an eye out this week is going to be Boeing, right? No surprise. Now, our base case here is that the percentage play, the quick trade for the gap fill is done here. We just got extremely lucky with the news hitting. So that's absolutely nothing to do with any kind of technicals. That's just a lottery ticket, early Christmas present. Right now, for all those questions coming in, clearly line in the sand to the upside. This is our ultimate target to the downside. And here we're very neutral, right? So we have to see how we trade. This is just a range trade. So as you can imagine, in the middle of the range, we feel there's very little edge, but we would not be surprised to see this ultimately come back into the 300s, sub 300, no change in the way we've been looking at that and we've been discussing that or trading it. Now, in terms of CL, there's going to be another interesting one going into the week. And our base case remains that we should see a lot of chop inside the 60 and the 55. And unless we get something really substantial, you see that 200 DMA is going to be coming back down into that 60. Unless we see something really substantial, we don't expect it. So in terms of news hitting the wires, we don't necessarily expect it to trade sub 55 or above the 60. So for us, we're just looking for possible trades inside this range. Now, what was interesting, we were looking for opportunities to fade, and you see here you got this failure right back through these highs. So our base case now is that as long as this holds, right, this is the path of least resistance that ultimately could open up that retest of the 55. So we'll have to see how this trades, but we're looking at this as the pivotal level, right? Bullish above, bearish below. So what it means is above here, we would expect it to try and grind higher and cause some more pain and clip those stops, especially if we start to see one of those coordinated ramps with equities ramping, USD JPY ramping at the same time. But especially since we've broken this way and we've seen a bit of weight here, and if we go into this period post the quad witching where you see seasonally the markets trade a little bit heavier, and also you tend to see in this period yen USD JPY trading a little bit heavier. So this week we will tend to be bearish USD JPY. That's what I'm going to focus in on the video too, because of some seasonal patterns and of the fiscal year selling and stuff like that. We'll discuss that later. We think that if this can hold, there's a good chance that we can get some more downside going. So this is an area which we're going to be focusing on in extreme detail. And especially if this plays out, one thing which I wanted to mention here in the weekly outlook is CAD, right? Because this becomes very, very interesting. So we've been discussing the rotation higher on CAD, especially once we got that explosive move where we said the only thing you could do and buy them. And so far, especially if you look at it on the daily, right, it's come right back in, and we've had a lot of confluence here, right? We had the confluence of, number one, this trend line, which was previous resistance acting as support. Number two, broadly speaking, we had the 50 back of the move from A to B, the 50 back zone here, so number two. And number three, we had the 100 DMA, the 50 DMA coming in. So there's a lot of confluence here, right? If you're somebody who's looking at confluence, this is a very interesting zone for the longs, and the longs worked out quite nicely. So we've been discussing these in the weekly webinar in detail. So right here, that's what's in play. And especially if we see these moves trading on in equities, if we see this move come trying to get more traction in crude, then there's decent potential for this to continue to try and press the upside and take out these highs. Again, a lot of this is going to be dependent on the Fed and how dovish or hawkish Mr. Powell is going to be. Now, what's interesting here also for the lovers of symmetry, we've discussed this before, it's quite interesting. Look at these moves here. So I'm on the weekly, right? Lows to highs, okay? So now I'm going to grab the length of the move and just extrapolate. Look at this. So to these next lows, highs, lows, into the highs, lows, for those of you who like voodoo, into the highs. You see how symmetrical all these thrusts higher are? So again, this is pointing to what we discussed, right? A retest higher, break above as the market continues to squeeze the shorts out. You see this fairly nice little channel with very symmetrical moves. 1, 2, 3, 4, 5. This is the fifth one, trying to come back in and possibly make it all the way through these highs. So it's a very interesting pattern. We'll be discussing this a lot more, but clearly the longs are in play here, okay? So hope that was useful, guys. Have an awesome week. For the guys who watch this on YouTube, as always, thank you so much for retweeting, liking, and the guys who take the time to comment. It's always nice to see people like the stuff or appreciate it. So thank you so much. And for those who don't say anything, I hope you're enjoying it anyway. So have an awesome one to everybody, wishing everybody an awesome week, and talk to you guys soon. Take care. Bye-bye.